Winter is here, everyone. I woke up this morning, I look outside my window, and there is snow everywhere. So we are getting into the Christmas spirit. We're feeling the cold, we're feeling the gifts. I've actually already started buying some stuff. There were really great deals this Black Friday and Cyber Monday. And actually, it is Cyber Monday right now. So I'm still picking up a few gifts. I hope you guys are. Take advantage of those deals while they are there. Welcome, everyone. This is the Golden Parallel, where we discuss the stories, trends, and financial insights shaping our world. Join us every Monday, Wednesday, and Fridays. We explore news and markets across North America, Europe, and Asia. In today's episode, we'll discuss the re-emergence of antitrust enforcement here in America and its impacts on the American economy. But before we get into that, we need to go over everyone's favorite segment, our weekly North American headlines. MSNBC and CNN have lost nearly half their viewers since election night. MSNBC's viewership has dropped 47% following Donald Trump's 2024 election win, with primetime ratings falling by 53%. CNN has also seen a significant decline in ratings, falling 47% themselves. Comcast, the owner of MSNBC, announced plans to spin off the news channel amid these viewership declines. So this goes to show you again how the legacy and mainstream media is really struggling right now. Actually, if you look at the median or mean age, the average or mean age of a CNN or MSNBC viewer, it's 67 and 70 respectively. So there are no young people watching these platforms, and advertisers are starting to realize this, and they're starting to shift their advertising tactics away from these mainstream media outlets to social media and influencer-based marketing and advertising. It's a very interesting topic. I actually do want to create a video on this here in the future, so we'll have an episode on that coming up in the next few weeks. The FTC has opened a wide-ranging antitrust probe into Microsoft. The FTC is examining accusations that Microsoft is abusing market power and productivity software to restrict data movement from Azure, their cloud provider, to competitors. The agency is also reviewing practices related to cybersecurity and artificial intelligence products, affecting Microsoft's $650 million deal with the AI startup Inflection AI. So this is continuing a rising trend of antitrust cases by the FTC this year and last year, and is actually what we're going to be discussing in today's story. So stay tuned for that. President-elect Donald Trump has threatened 100% tariffs against 9 nations if they undermine the US dollar, referring to specifically here the BRIC alliance. Trump warned that countries in the BRIC alliance must commit to not creating a new currency or face American tariffs. Trump stated that any country attempting to replace the United States dollar in global trade should expect to, quote, wave goodbye to America, end quote. Stellantis' CEO resigns as the carmaker continues to struggle with slumping sales. The company's board accepted the CEO's resignation on Sunday, which is effective immediately. Last month, Stellantis' board said they had started looking for a successor for that CEO position, who had been due to stand down when his current 5-year contract ends in early 2026. A Stellantis' earnings report in July said sales in North America, the main profit source, were down 18% in the first 6 months. And the company cut its profit forecast and later said third quarter sales in North America were down 20% on the 2023 figure. So that is it for our North American weekly headlines. Stick with us to hear about the FTC cracking down on America's largest tech corporations for antitrust violations. Welcome back. So the Federal Trade Commission, or FTC, has recently begun intensifying its antitrust enforcement under the leadership of Chair Lina Khan, who was appointed to that FTC chair under Biden in 2021. Now, the FTC has adopted a far more aggressive approach and stance towards large technology companies, commonly referred to as big tech. Now, if we want to talk about this and how the FTC got to where it is and why it's enforcing these antitrust laws now, we need to look at the history of the FTC and how we got here. So, the basic history of the FTC kind of looks like this: it was founded in 1917. And from 1917 all the way up to when Ronald Reagan was put as president or elected as president in the early 80s, it went about its job and enforced antitrust laws, preventing monopolies and trying to protect consumer rights. Now, this radically changed when Ronald Reagan got into office. The FTC really took a step back at that point and was far less resistant to large mergers and M&A during his presidency. During that 80s time, we saw a massive amount of consolidation of different sectors like banking, healthcare, energy, and tech. Now, this kind of hands off idea and hands off approach ran all the way through the late 2000s, where the FTC was relatively lenient, but not entirely lenient. Now, there were a few major antitrust cases during this period. One that I want to bring up is US v. Microsoft, which is probably the most famous in American history. The FTC and the DOJ sued Microsoft and alleged that they were abusing monopoly power in the PC operating systems market. And so I wanted to say that just to show that there were some that were actually enforced in the 90s and 2000s, really none in the 80s, but there was still a hands-off approach there. They still allowed many of these mergers to go through. Now, after the 2008 financial crisis, the FTC resumed a far more active role in regulating mergers and acquisitions, especially in banking, healthcare, energy, and technology. There was also a growing concerns about the dominance of tech companies like Google, Facebook, and Amazon that led to renewed calls for stricter enforcement, though a lot of these calls were not truly acted upon, right? So there was only a few blocks on the tech sector, but most of the tech sector was allowed to kind of do their own thing and go through with M&A practices. Now, this leads us to where we are today. So the FTC today has shifted their focus to be far more aggressive in antitrust enforcement, and they're really targeting big tech companies. So think of Amazon, Meta, Google, Microsoft, and they're kind of staying away from Apple. Apple is really, really good at wiggling their way through a lot of this stuff. So some recent FTC lawsuits have been the attempted block of Meta's acquisition of Within Limited, which is a company that focuses on virtual reality. And they also challenged Microsoft's acquisition of Activision Blizzard, which is a video game company. That was actually held up in a UK court for quite some time. So why is the FTC starting to crack down on big tech? Well, that kind of breaks down into three different parts here. So the first one is market concentration and corporate dominance of the tech industry. The second one would be a changing antitrust philosophy within the FTC and the US government. And finally, there's a lot more public and political pressure behind the FTC to enforce antitrust. So let's start with the first one, which is market concentration and corporate dominance. There's really it's like 7 tech companies that rule the whole technology industry. Outside of that, there's very little competition. And when a market gets digitalized, when it transforms from an offline to an online market, it becomes increasingly a winner take all or a winner take most scenario. And the way you can think about this is in the monopolies of the tech industry. So think about retail. What company has a market dominant share of retail? It's Amazon. Think about information and search. Which company has a really dominant market share of that? It's Google. Think about social media. Who has a dominant market share of that? It's Meta. And so these markets that become digitalized become a winner take all scenario, and all the profit and wealth is derived into very few companies, which is great if you are in the top 10% of wealth and you own a lot of these companies' stock. But if you are not in that, then you do not benefit very much from this. It actually just hurts you. Now, remember, the US stock market, 90% of US stocks are owned by the top 10% of wealth in America. So when you have these monopolies that generate obscene amounts of wealth, that wealth is actually really being driven into the top 10% of Americans. It is nothing but a thinly veiled transfer of wealth from poor to rich. Oops, sorry. Now, market competition in the tech industry is nearly extinct. And if we look at an emerging technology sector, which is AI, we're already seeing monopolies forming. AI and Gronk, which is X's AI, really already owns more than half of the market share, which constitutes a monopoly, right? So technology that's being developed, new technology, before it even has a chance to expand and new competitors to get into the market, is already being monopolized. And this is one of the primary reasons why the FTC is starting to crack down on these big tech companies. Now, if we move on to a changing antitrust philosophy, we are seeing that the FTC is under new leadership and younger leadership in particular. Lena Khan is far younger than most FTC chairs in history. And she has focused or shifted the focus from traditional consumer welfare, which prioritizes price impacts, to more broader concerns, including effects on innovation, market structure, and workers. The prior leniency of the FTC and its antitrust enforcement was inspired by the Chicago School of Economics, which really emphasized a hands-off approach, and that is being reconsidered. Critics argue that approach to allow monopolies to flourish under the guise of efficiency is not good. Now, that is primarily the reason why the philosophy of the FTC was hands off. It was that monopolies allow efficiencies to happen, and that is true. But again, the wealth that is generated from those efficiencies does not go to the bottom 90% of Americans. It goes to the top 10% because they own 90% of the stocks. And that is where the value goes. It goes into the company, into the market capitalization, then to the owners of the stocks, which is the top 10% of America. So finally, public and political pressure. Now, both major United States political parties, the Democrats and Republicans, are calling for stricter antitrust oversight, and for different reasons. So the Democrats are focusing more on labor and consumer impacts and protection of consumer rights, while Republicans are highlighting censorship and market fairness, where companies like Google and Meta have a ton of control over the information that is shared on their platforms. And so, both are valid arguments, honestly. Both are very valid arguments. So, public concerns about rising prices, reduced competition, and privacy violations have fueled calls for stronger enforcement. And on the political side, they are seeing a little bit different. Democrats want that consumer impact and consumer protection. Republicans want less censorship and more fairness in the information that is being provided on these platforms. So that is happening. That's what's happening with public and political pressure. And so those three things are really driving the FTC to be far, far more aggressive in its antitrust enforcement. Now, what's interesting is the future of this, right? Lena Khan was put in as the chair of the FTC under Biden in 2021. Now, with Trump coming in the Trump administration, he might remove her. He hasn't yet, though. Trump has yet to appoint someone to the FTC chair. So he might keep her, which I think would be a great thing. I think it is quite obvious that these companies have generated an immense amount of wealth, and that wealth is not equally distributed among the US population. It's going to the top 10%, even more to the top 1%. So I hope Trump does not remove her, and he hasn't yet. So there is a chance that Lena Khan will remain the FTC chair throughout Trump's second term. But we're going to have to wait and see how that goes. This is a topic and a story I want to follow up on. If Trump does make an announcement on that, I will talk about it in our weekly headlines, or maybe I'll make a whole nother episode on this topic and talk about the effects of how a change in the FTC chair to someone who's far more open to M&A and acquisitions will change the market dynamics, and how we might see a lot more consolidation and wealth generation for the top 10%. Like I said, these companies, it is nothing but a thinly veiled transfer of wealth between the poor and the rich when you have all these companies generate all this wealth, and they are owned by the top 10% of wealth in America. So that's it for today. Not too bad. I didn't want to get too much in the weeds with this, but come back Wednesday. We are talking about overregulation in Europe. And so it's kind of the opposite of this. We're actually going to be talking about how Europe is really struggling with their overregulation problem. So we'll see you Wednesday. Thank you for watching The Golden Parallel. We post new episodes every Monday, Wednesday, and Friday. Subscribe to stay in the loop and comment below on what you thought about today's topic. We'll see you next time.